Hello, and welcome to this episode of Inside Legal ESG. My name is Pamela Cone, and I'm delighted to serve as the host for this podcast series. Today, we are so fortunate to have with us Rob Karpati, mining partner at Blended Capital Group. Welcome, Rob.
Good morning, Pam, and really appreciate the opportunity to be on the podcast and talk through some important topics with you.
Excellent. So let's get started. Let's start with telling us about your background and how did you get to be working in the sustainability space?
Sure. So like a lot of people, backgrounds are never straight line from where you start and where you end up. So for me, I've had a career in finance. I was a finance leader in and beyond Canada, primarily in the DuPont company over 30 or so years. And about 5 years ago, it was time to align my purpose and my values, try to give back, try to make a difference in terms of social impact and specifically dignity. So as I started to explore opportunities around that, I landed on mining because it has outsized community impacts. And there's 45 million artisanal miners out there, essentially who are one-off prospectors who are very vulnerable and living in poverty. So my thesis was, which I've been working on for the last several years, through the application of financing, through organized approaches to engagement and formalization, and through legal frameworks, there's the opportunity to change lives and economies. So all in with that, and that became my focus, and that's how I ended up with the Blended Capital Group as well.
And you mentioned briefly, and I should have mentioned it in your introduction, that you're based in Toronto, Canada.
I am.
So that might give some perspective to some of your answers.
Yeah, and so Canada, by definition, is a mining hub. Some like 70% of the world's publicly traded mining companies are traded on Canadian exchanges. So when you think about ability to influence, ability to access, ability to engage, given where the people are, it's just a great place to be.
And you mentioned now that you've landed at Blended Capital Group. Tell us about Blended Capital Group and what you're working on with them.
Absolutely. So Blended Capital Group was founded by Paul Clemens Hunt back in 2012. He's the person who coined the phrase ESG back in 2004, and the company's focused on last mile impact, really through agriculture, through mining, through infrastructure, different domains. And as I got to know Paul and got to know the work of the Blended Capital Group, there's an obvious last mile dimension to artisanal mining formalization. So there was a natural fit, and we decided to join up. And with and through Paul, we've been trying to create a focus on mining that includes a few different things. Number one, there needs to be operational capacity towards changing approaches on the ground, changing outcomes on the ground. So we've built a consortium with a series of world-class partners, some of whom Alliance for Responsible Mining, 11 Sources, BanQ, Napier Meridian, well-known, globally recognized organizations with a focus on mining. So the intent of these is to collaborate together towards positive outcome shifts. Along with that, money makes the world go around. And so we've been working with strategic investors, and some of our partners investing for good, and really defining, developing, and delivering financial instruments, which are going to be the heart of an investment marketplace that supports ASM formalization. Notionally, artisanal mining has been capital starved. Investors worry about risk. Investors don't understand it. What's the difference between artisanal and illegal mining? What are these small guys when you've got big, huge companies like BHP or Rio Tinto out there? How do they all come together? So the work with these investors is clarifying that, really bringing visibility to the opportunity and targeting both debt and equity instruments that make sense given the vast opportunities that are on the table.
For my benefit and for the benefit of the listeners, how would you define artisanal mining? Because this is the first time I've heard that phrase, so I'm curious.
Small-scale informal mining that tends to occur at the ground level as opposed to underground. So there's 45 million artisanal miners. They operate in about 80 countries, and they're largely independent and informal of each other. So what informal means is there are no companies, no cooperatives, no associations. They work individually, which of course means they tend to be vulnerable. The 15% who are formalized, which our ambition is to increase massively, are much less vulnerable, and they're better off, and they have much more opportunities because they're in companies, they're in associations or co-ops. The basis for governance is there. So what artisanal miners produce fall into three categories. One is critical minerals, things we need for the energy transition: copper, cobalt, lithium, and so on. And we're not going to have enough of them. So there's a supply opportunity with this sector. Another group are precious metals and stones: gold, silver, diamonds. And again, gold's currency. So you think about it as strategically and financially important, just like you do with critical minerals. And the third sector is construction materials, good old-fashioned rock quarrying and sand. So the sector is diverse. The sector is in a whole lot of different legal environments. The sector has a whole lot of opportunities that boil down to ensuring there are fit-for-purpose laws, ensuring there's financing access, and engaging based on realities of the ground towards improved governance and capacity.
Wow, that's a big agenda and a lot of work. That's wonderful. So tell us what you're seeing as the hottest trends, either in mining specifically or more generally in ESG. What are you seeing?
So look, ESG itself, the genie's out of the bottle. People
Mhm.
get it that stakeholders matter. There are legal implications, reputation implications, business implications. ESG fundamentally matters. Companies that think about social, think about environmental, are really positioning themselves to strengthen themselves for the future. So you look at the world of mining, genie's out of the bottle. People get it. Communities matter. Communities make or break conflict-free projects. Artisanal mining matters because they share land with large companies. They're extensions of communities. They're potential enablers of sustainable development. So along with that, when you think about mining itself, critical minerals are a burning platform. We're not going to have enough copper. We're not going to have enough cobalt. We're not going to have enough of a lot of these different minerals. So the industry needs to evolve business models. So what does that look like? Inclusion. It means community focus. It means blended finance, thinking about multiple sources of capital, including public financing combined with private investment. It means artisanal mining formalization is a mechanism for enhancing productivity, therefore tonnage, and along with that, improving economies. So you think about, what does all that involve? Well, we need to understand legal frameworks. What does it mean to engage with communities? 54% of critical mineral projects are on indigenous lands worldwide. So UN DRIP, what does free, prior, and informed consent mean? What do all the specific mining rules in all the specific countries mean? What does human rights imply? So let's say there's a project with a Canadian mining company in some other country and there's human rights questions. That can come back to the Canadian Ombudsman for Responsible Business. Europe has its own rules, US has its own rules, and so on. So impact benefits agreements, so on. So you think about that evolution of legal awareness and stakeholder awareness, it takes you straight to financing. Investors care about transparency. They want to know that risks are being mitigated with communities and with broader stakeholders because it's their money. And obviously, they don't want to burn their money. And obviously, they'd rather, along with returns, create positive social impacts. So in the world of artisanal mining, one of the things that's evolving is an investment marketplace. ASM, because it's been largely informal, has been largely devoid of financing. But investors are coming to see there's an opportunity here. 45 million miners, largely unequipped. You equip them, you train them, and you govern them properly with fit for purpose governance structures. The productivity potential is massive. So the notion of debt instruments, equity instruments, being able to engage a portfolio of artisanal mining formalization projects towards positive return combined with positive social impact and critical mineral supply, which is environmental impact, is catalyzing the development of a marketplace that's going to really be maturing in the next few years.
And where would you put Canada on the scale of maturing or not when it comes to responsible mining? I think of Canada as a leader, but I'm curious about your perspective.
So we have a massive mining industry in Canada. We have massive important mining associations in Canada, the CIM, the Mining Association of Canada, PDAC, and so on. So there is a focus and understanding that responsible mining matters. There's obviously inconsistent practice. There's obviously work to do on defining and delivering best practice across the board. But the country gets it, and the mining industry itself gets it, that there's no get out of jail free card here. Mining is, responsible is a prerequisite towards long-term success. Because communities at the end of the day bite back if you don't listen to them. So we've recently seen unrest in the closure of a large copper mine in Panama, let's say. We've seen it in Peru. We've seen it in different parts of the world as well. And there's a straight line between those and community buy-in, social license. And social license, of course, is earned. It's earned based on developed trust that starts with earnest engagement. So the need for earnest engagement is pretty understood at this stage. And the opportunity is to deliver that in a consistent, best practice oriented way. And the other opportunity is to extend that into the world of artisanal mining, which is pretty new in the evolution, because there's a difference between thinking about a large giant mine somewhere, pick a company, any company, a Newmont gold mine in some country, or formalizing a few hundred or a few thousand artisanal miners and reducing their vulnerability. But what's interesting, because they share land and because artisanal miners are often early indicators for exploration, the two go together. And people are starting to get that the two go together. You fundamentally can't have trust with the community when you don't have trust with the artisanal miners who extend from that community.
Mm-hmm, mm-hmm. And are there good examples of this already happening where the larger mining companies are collaborating with, leveraging, working with the artisanal miners in their regions?
So yeah, there's both good and bad examples.
Mm-hmm.
And you think about a company that's pretty good, that's leading edge ahead of the curve. Newmont Gold is up there. They understand the notion of communities. They understand the notion of engagement. They understand the notion of needing to earn trust and moving at the speed of trust. In terms of artisanal mining formalization, there's lots of examples of successful formalization out there. So two of the partners that the Blended Capital Group has, one being the Alliance for Responsible Mining, the other being 11 Sources, have done lots of projects in different parts of Africa and Latin America that have organized thatches of ASM.
Mm-hmm.
And they've done it by targeting a few things. They start with voices of miners and communities, because guess what? Solutions aren't imposed. They're collaboratively developed, and it's their reality, not the reality we're here to help from some faraway place, and we know what's good for you. Wrong. The second thing is, along with miners and communities, it's a stakeholder-oriented approach. What are the broader stakeholders, the value chain players, the large minds, the government? How do they all bake together? What does integration look like? Because the ecosystem is a collective ecosystem. It's not in a bubble. So thinking about it as a collective ecosystem is a route for success. And then what does sustained success look like? Meaning there needs to be a business relevant, sustainable structure left in place. So called a co-op or a company or an association, something that can stand for the long term, reduce vulnerability, enable consistent practice, enable dialogue with suppliers, customers, and value chain reengineering that may or may not be in play depending on the realities. And the last part is the importance of government, which is really, to a degree, the importance of the law. Because guess what? You're working in pick a country, any country, Kenya or Ecuador or Morocco or anywhere else. Well, they all have their own legal frameworks. They all have their own policy frameworks. But successful formalization requires an environment that's conducive to that, which means which means ensuring that the environment exists or helping to enable it where there are gaps in it.
So what are your predictions for, let's say, the next 18 months for the mining sector and then also for ESG in general?
So for the mining sector in particular, and then I'll broaden it, the genie's out of the bottle. So the notion of stakeholders is here to stay. Best practices are going to keep maturing. There's something called the UN Mining 2030 Investor Commission, which is all about aligned best practices and investor visibility and reporting to that end. It's led by someone named Adam Matthews. That work's maturing rapidly. So alignment of reporting, alignment of practice, alignment of expectation, that's thing number one. Thing number two in the world of artisanal miners, the notion of a mature investment marketplace, it's coming because the opportunity is obvious. The critical minerals are a burning platform for needing it. We need more critical minerals, therefore we need formalized artisanal miners, therefore money makes the world go round. So debt and equity and a variety of instruments that come with it in the next couple of years, it's going to be real. Then you think about the broader world, and look, the genie's out of the bottle. I keep saying that. So are we going to move towards a more converged approach towards reporting over time and less of an alphabet soup when it comes to ESG reporting? Absolutely. Is the work going to become more and more integrated in the DNA of business? Absolutely. Is the work going to become more and more integrated in the work of investors? Absolutely. So investors get it today, but are best practices mature? Well, they're getting more and more mature every day. And then you think about the work of legal ESG and some of what you do. Is the work getting more and more mature in the legal community? Well, every day is a step closer. People get it. Stakeholders matter. Legal risks as well as obligations are diverse. C-suites need to get it. That's going to happen over the course of time. So to me, maturation is the broad theme. Maturation given value.
I love what you say when you say the genie is out of the bottle, because it to me, it's regardless, especially here in the US, regardless of the political pushback sometimes that ESG is getting or has received, the horse is out of the barn, the genie is out of the bottle, the train has left the station, all of those analogies, and we're not going back, right? There's so much progress and so much maturity that is happening throughout the world, if not yet in the United States, that it's driving behavior even here in the United States, almost regardless of whether or not we ever get our own regulations in place. multinational companies that are based in the US are already having to report and disclose and comply with regulations in other countries. So I think, yes, the maturity is happening. There are some countries and regions that are leading, and then there's the United States where we're still sort of struggling with it, but we're moving down the road, substantially maturing. So given this complex environment and the challenges that we face, what gives you hope?
So a lot of things give me hope.
I'm so glad to hear that.
So first, to your point about politics, political posturing is different than business reality. And business reality is stakeholders create both risks and opportunities, and companies have a fiduciary duty to go after that. So why am I starting with that? Well, the genie's out of the bottle, or like you said, the horse is out of the barn.
Yeah.
And now that businesses realize that and coming to understand that quite clearly, there's a long-term line towards maturing best practices. It will happen because it has to happen because there's value to be had.
Yep.
Is there are there pressures between short and long term? Yeah, of course. But as a finance person, obviously value optimization means long-term value. Are maturing practices evolving in finance? Yes. In legal? Yes. In business? Yes. In industries like mining? Yes. So to me, once this is started, there's an inevitability to it that's going to, over the course of time, get us there. The question that you and I have, and that the world has, is how quickly is that going to be? So we know the world's warming. We know there's increased inequality. We know there's all sorts of challenges out there, both social and environmental. And we know that ESG is a mechanism in a broader context to enable shifts in outcomes around some of these things. Now, is it going to get there quickly enough? And what does that look like? Time will tell. But the reality is, it's moving and it's going to change outcomes.
That gives me hope too, right? The momentum is there, which I think is great. Thank you so much for your time today, Rob. It's been enlightening to me. I'm sure it's been enlightening to the audience as well. I've learned a lot about mining today, as well as the role they're playing in working towards better outcomes. Thank you so much.
Thank you very much, Pam. I really appreciated the opportunity to discuss this.
Bye-bye.